Hello Sector Watchers, welcome to the show. This is the 79th episode of Sector Spotlight for Tuesday the 11th of May, recording it on Monday the 10th. My name is Julius de Kempenaer and I'm your host for today's show, presenting to you from Amsterdam in the Netherlands as usual. You see my handles on the screen. If you have anything to share with me, want to ask a question, please don't hesitate and reach me on any of those channels. I'm happy to engage in the conversation, and if there are good questions, then we can talk about them in a mailbag section here in the show. For today, I am planning to obviously do an overview of what happened last week. So we're going to take a look at the rotations in asset classes and sectors using RRG, looking through that RRG lens. And I want to spend a lot of time actually putting those daily rotations that we usually look at and mix them with the weekly picture, just let's say my time frame, and see if we can find any meaningful trends, because I do feel that there's a lot going on under the hood, and it's not yet all super visible. Hence the title of the show. Things are not good under the hood, or things are not looking good under the hood. Anyway, let's kickstart this show, starting off with an overview of sectors and asset classes and blend that right into a view of the markets based on the weekly charts. Starting with the asset classes. On the left-hand side, we have the relative rotation graph showing the rotations for various asset class ETFs over the last 5 days. So that's last week, ending on May 7, Friday, May 7. And looking in the table, we can see that it was another good week for commodities. Both ETFs strongly up. DJP up 4.2%, GSG up 3%. And then followed by the rest of the asset classes are all very close together. It was a good week for stocks. They've been outperforming, up 70 basis points versus the benchmark up 60 basis points. And then the fixed income related ETFs, asset classes, corporate bonds, slightly higher, just in line with stocks, 70 basis points, government bond, 30 bips, and high yield only 0.2. And then we see that underperformance, but also a negative performance, was shown for real estate and for the US dollar. Now, if we bring that into the longer term picture, that is the RRG here on the right, where we see the weekly rotations. And we can, if we just align them, and the way I usually do that is I rank them on symbol. So pretty much alphabetical, and I do it in both tables, and then I can actually highlight them side by side. So the US dollar on the daily had a good week, but you can see that the weekly rotation is rolling over, inside improving. Weekly is usually most of the time the leading RRG. And we're trying to confirm that with the daily. So the way I read this right now is that the US dollar on the weekly is rolling over, is losing strength. And if you can see the dollar tail on the daily, you can see that it is furthest to the left. So there's a pretty big chance that this is not going to make it all the way to the right, and that it will roll over, inside improving. Obviously, there's no guarantee for that, but that's the way I try to mix those two. If you look at commodities, so DJP, on the weekly you see a decline. It's almost vertical. That means that it is primarily a loss of relative momentum and not yet of relative strength, although there is plenty of room for DJP to lose some relative strength as well without turning the whole thing around. And if you look on the daily, that's actually confirming what's going on here. It's losing a little bit of momentum, but it's still moving to the right. So still gaining in relative strength on the daily scale. It's in a pause on the weekly. So there's a very good chance that this will turn around back up. So please keep an eye on these commodity on the commodity asset class, because this is really turning around a long-term picture, and that we'll see that in more depth when we look at the commodity charts, just the price charts. If we look at government bonds, that's it. That's a very short tail, so there's not a lot of power behind that move. If you want to learn more about that, there's a episode of Sector Spotlight that's called the Tale of the Tails, and I actually wrote an article on the same subject, slightly different wording, last week in the RRG blog, and that deals with what the length of a tail can tell you. What we see here is, and we have to actually play around a little bit to see what's going on. You can see that government bonds actually hooked down on the weekly, and you can see that it is a very short tail on the daily. So that remains on the left hand side, remains weak, remains underperforming VBINX, and by definition it means remaining underperforming the stock market. We jump to GSG. That's the other commodity ETFs. See similar picture, vertical decline, mainly a loss of relative momentum, but it's still gaining on the RS ratio scale on the daily RRG. It's moving sideways horizontally. That means that it is gaining relative strength, but at a stable pace. So that trend is not going faster. It's just stable, moving in the same pace at the same speed, so to say. We go to high yield bonds. Then we see a hiccup here. So it was a good week. But if you look at the rotation here, and again, this is a short tail. Compare this tail to some of the other tails here on this RRG, and I think you'll agree that high yield bonds is a very short tail. And what it tells me is that it is in a stable relative downtrend. So short tails means that it is a stable trend. So on the left-hand side means that it's a downtrend. So it's a stable relative downtrend versus VBINX and versus everything that's on the right of it. Go to stocks, ITOT. We'll dive a little bit more in depth into stocks when we start talking about sectors, but here you see the interaction between the daily and the weekly RRG on the broader market. Short tails, stable trends, in positive territory, so that's good, outperforming VBINX. But we're losing a little bit of strength, and we're losing a little bit of relative strength, and we're losing a little bit of relative momentum on the weekly. And if we spoiler alert, when we start looking at sectors and at the S&P 500, I think that we need a little bit more of a correction before we can continue higher. If you look back on the show that we did on the monthly charts, there's no doubt about it that those weekly monthly trends are all very much still intact and going higher, but I'm still not very sure about the shorter term. So things are not good under the hood. If we look at corporate bonds, then weekly inside the lagging quadrant, vertical pickup of relative momentum is displayed here on the daily. So that pickup is translated into a few weeks of higher moves, but it's not really picking up relative strength versus VBINX, so it remains a weak asset class, it remains underperforming. And then we finalize this with V and Q, the real estate asset classes are real estate, and we can see that it is inside leading on the weekly RRG, and it just dropped from leading into weakening on the daily RRG. Now, this is obviously a strong tail. It's not too long, it's medium length, I would say. But what is nice is that it's picking up and it's moving to the right, so it's continuing to pick up relative strength. Flat, and that flat here in the weekly is caused by the down on the daily. And you know, given the high reading in the leading quadrant on the weekly, I am going to assume that this tail is either going to turn around inside weakening, or make a very short rotation through lagging, improving, and back up, because this is actually a pretty strong position, because it needs a hell of a lot of weakness in terms of price and relative before it actually rotates from that high reading in the weekly leading quadrant all the way down to weakening and back up. So I remain fairly positive on the real estate sector. Now I'm quickly gonna swap the weekly RRG to the left hand side, and I'm going to bring up the weekly charts to put things a little bit into perspective. Now here is ITOT. That's, I think, the most important asset classes for most people that watch RRG. Watch Sector Spotlight and like RRG. So main area of interest is the stock market. And if we bring that into perspective, then we have seen that short tail for ITOT on that RRG. We discussed that. And you can see exactly why that is. That's because these RRG lines, the RS ratio and the RS momentum lines, are almost moving flat, and that's causing that very short tail. If you look at the price chart, then you can see that there is a very nice parallel trend channel still moving higher. And that's not in danger. It's the whole thing, the not good under the hood so far means that I think that we need some sort of a correction. And it could be either the lower end of this trend channel, although that is very steep, but also there's good support around 92, 91, 95 on ITOT, and that uptrend versus VBINX is super strong. So it wouldn't be a surprise if we get some sort of a corrective move here, but that's not going to turn this whole trend around within the next 2 weeks. I really don't think that's going to happen, but I do expect a little bit of weakness going forward. If we look at SPY, that's the a little bit more familiar index. Then you see a similar picture, a very high correlation with ITOT. Uptrend intact. Here's a little bit more room. We've got 410, obviously. That's an important level to watch. We've got the old high here, which is just below 400. That's 395. I really think we could even go as low as 350 or that 340, 350 area, without damaging that very long-term trend. So it's a meaningful correction, tradable probably for a lot of people, but it's not going to change that long-term trend. At least it's not going to happen and do that in the next couple of weeks. The same goes for the relative strength versus VBINX. It would not harm this uptrend if we see a correction of relative strength going back to 8.5, which is the breakout level that we saw at the start of the year. RRG line still well above 100, so no problem there. Either. If we go to Gov, that's the government bonds section, then as I said, medium-term trends on the left-hand side, relative downtrend versus VBINX, and that's clearly visible when you look at the relative strength here versus VBINX. That's a clear downtrend. We broke this important support level. We're going lower. We're losing a little bit of pace here. That's why these lines are starting to move sideways. That's why the tail here is shortening, and we're very close to 100. But if you look at the price chart, then this move down is clearly visible. We see a little bit of a hiccup. Could go as high as this former peak level gap area. We're talking just below 26.75. So for the time being, the first or the strong decline, the high momentum decline, seems to have come to a rest, but it's definitely not an uptrend yet, and it doesn't look as if it's going to turn around very, very fast. So whatever happens, the preference for stocks over bonds in the long term definitely remains. And then I'm going to skip high yield and corporate. I'm going to look at V&Q at the real estate asset class and bring up that here. And then we see we're touching that all-time high level, that high level here that we saw at the start of 2020. That could provide a little bit of a setback, but what I really like is the turnaround here in relative strength. That's continuing higher. It's continuing to push the RRG lines higher, which is a positive thing. And I think that this is one of the preferred asset classes for now. And I said I'm going to skip, but I'm actually going to take a look at DJP and GSG, because they are, I think, the most interesting asset class at the moment. I was going to say one of the most asset classes, but sometimes you just got to put your money where your mouth is. And I really think that that commodities are working on a long-term turnaround. And if you look here at DJP, you see that it's breaking to new highs. Let's make this chart a little bit longer. Just change that and see a longer term picture here. And you can see that nice base that we're breaking out from here. That's a very meaningful breakout. It's a very meaningful base. The relative strength here, it's almost not visible anymore, but we just looked at it. And I think that makes DJP, the Bloomberg Commodity Index, one of the most interesting, if not the most interesting asset class, together with GSG, which is a slight variation. But we see a nice breakout here as well. And let's put that into a longer term chart and see how that works. And you got this. You can see with everything that this is a long-term breakout in the making. So even despite the fact that we've seen quite a big rally already, I do think that there is much more in store for the commodities as an asset class. I'm going to wrap up the asset class discussion here, and we're going to move on to the stock market and to the sectors. And now let's move to sectors. On the left-hand side, you have the daily RRG for the 11 S&P sectors. Let's quickly do the overview of the rotations of last week. Based on the table, we see super strong performance for the energy sector. Look at that tail. That's a straight line. You can almost put a ruler next to it. I haven't seen those very much. And as a matter of fact, I haven't seen an RRG that is so moving opposite or so clearly, with energy, financials, materials, industrials moving, like in straight lines to the right, and then a straight line to the left for technology, and then some drizzle there in the middle. So you got the energy, materials, financials, industrials outperforming, staples and healthcare as well. Real estate flat. Utilities flat, and then the S&P 500. By the way, this is already including today, I see. So I'm recording this after the close, so let's quickly go. So this is last week. Doesn't change much. Energy, materials, financials, industrials, healthcare, staples, SPY up 1.2%. And then communication services and the rest below it. Most notably, technology, 50 basis points, and discretionary, 70 basis points. And you got a weak week for real estate, but we'll see that it is a stronger sector overall. We've already seen that in asset classes. And utilities, -1. While we're here, and today is already closed, let's bring it in so you can see here what a day this Monday was, and what a kind of a change that made. It's like it's continuing these very strong moves, especially for energy, financials, materials, industrials, and in the opposite side for technology. And that's the not good under the hood, because obviously technology is a super important sector, and you can see that it's shooting off to the left inside the lagging quadrant. Now, let me put that next to the weekly and see if we can align them as we just did with asset classes. If we look with materials, then that's very nice. I mean, you see the weekly nice heading between 0 and 90 degrees, and you can see the daily nice, strong, gradual rise. So materials, definitely one of the better sectors at the moment. If we look at communication services, then you can see that it was losing relative momentum already slightly, and today it hooked around, and you can see that on the weekly, that rotation. This is only today's rotation, but it's already pushing that sector further into the weakening quadrant. And it looks as if the daily rotation is going to help that rotation further down on the weekly. So be careful with communication services. Now look at that straight line in energy. So the daily is super strong, but look at the weekly. We've got that super long tail, so it's rapidly losing a lot of relative momentum, and it's also losing relative strength. It's declining on the RS ratio scale. However, it is the strongest sector in the universe, because if you look at the RS ratio scale, which is the main scale, energy is the strongest, and we had a very strong and long move, and we're just giving back a little bit of that, and that's not a problem. And this combination, very high reading on the RS ratio scale, and a strong tail pointing into the leading quadrant, makes me believe and interpret this rotation here for energy as a temporary rolling over, and I'm actually looking for this to go back up again anytime soon. So that will probably give us a good new entry moment for the energy sector. We look at financials, very strong, strong move on the daily, and on the weekly it's kind of similar with energy, because it is very high reading. It's the second strongest sector on the RS ratio scale, and we're picking up on the daily again, so it's confirming the fact that financials is way to the right, but it's going through some sort of a setback. So we need to wait and see if this rotation here will be strong enough to turn that tail for financials around inside weakening. But for now, it looks as if this is just a temporary setback, just like for energy. Look at industrials. That's another one of those very straight tails into the leading quadrant. It's not as pronounced as the other ones that we just discussed, because you see that it is rolling over here. This obviously is not as far into the leading quadrant, and the tail is not as long, so it's less. The move is less strong compared to the others. So industrials kind of looking for a setback here. The weekly rotation is prevailing. Not sure if this is strong enough to pull that around. Now technology, all eyes on technology, and you see that it is inside the lagging quadrant, picked up a little bit around strength, but that's only marginal. It's only 1 day, and I'm quite surprised actually that it's doing that, because this trend is clearly down. So I think the technology sector is the threat under the hood, maybe together with discretionary, because that's also not looking too strong. Staples is picking up. You see that it is picking up. It's defensive sector. That's also adding to the belief that under the hood things are boiling a little bit. Here in the weekly, it's inside improving at a good heading. It's confirming, the daily is confirming the weekly move. So that's a defensive move. People moving to more defensive stocks out of technology. That's also adding to the belief that we're in some sort of a potential pause around the corner. We look at real estate, strong on the weekly. We've seen that on the asset classes. A little bit weaker on the daily. That's probably because we're pushing against that all-time high level. Again, this is strong. Good odds that this one will turn back up into leading without hitting lagging, or make a very short rotation, confirming the strength that we see on the weekly RRG. Go to utilities, now we see that utilities is turning around inside the lagging quadrant on the daily, and it's at a strong heading in the improving quadrant on the weekly RRG. This seems to be picking up and coming back into sync with the weekly tail for utilities. It's another defensive sector that's picking up strength. Again, adding to the belief that under the hood, people are moving to more defensive stocks, and at least out of technology. And here we have healthcare, picking up on the weekly, very stable on the daily. We'll have to wait and see if this tail here is going to be strong enough to actually turn back up and pull the weekly higher, so that's sort of undecided. And then let's finish off with the discretionary sector. You see it improved. It was a pretty weak sector. It's improving now on the weekly, so especially that last move here today, so that's actually pretty good. That last segment of that move, and you see that it is a tail that is shortening coming into here. It's a lot shorter when you compare that trend with the tail on technology and you compare the tail on discretionary. That's a lot shorter. These shorter segments mean that it's easier to turn around. So the weakness that we see in tech is there in discretionary, but not as strong. And that sort of all this together, especially the weakness in technology, the improvement in a few of the defensive sectors, slight improvement on discretionary on the weekly, not yet confirmed on the daily, make me believe that we're looking for a pause within the uptrend, and that's the whole story, I think. And let me bring up that short-term SPY chart that we look at almost every week. We had this overhead resistance. Last week, the show was titled Short-Term Weakness Ahead, and it sort of happened, except for the last Friday. And then you break to new highs, and you're like, oh my God, now the whole scenario is gone. And then Monday morning market opens, and you see that it's declining again. And what it actually does, this is actually strengthening that negative divergence that we pointed out. And it's now 3 touch points on the RSI, 3 touch points on the daily chart. This is a pretty serious negative divergence, and I am not always looking for divergences. I am not always wanting to, look at it, and it reminds me of my days when I was umpiring field hockey games at the top level in the Netherlands, and it's a bit long story to explain all the offenses, but there is a very specific offense in field hockey that is super hard to detect as an umpire because it goes very fast. Players are really skilled, and it's called stick shielding, and it's almost impossible to see for an umpire. So what we agreed as umpires, as a group of umpires, we are not going to hunt for that offense. We're not going to hunt and want to see shielding in every duel between two players. But when it's very obviously and it stands out, then we're going to blow the whistle and call that offense. And that's the way I approach negative divergences in general. I'm not hunting for them. I'm not trying to see divergences everywhere and all over the place. But when they really stand out, I'd like to call them. And I really think that this one here stands out massively now for the S&P 500. Add all of that with my view of sectors turning more defensive, especially weakness for the technology sector. And I do think that we have a case here where the long-term trend is intact, but we are just in for a little bit of a break here, and we're going to see a setback in the stock market in the coming days, weeks, I don't know. We'll have to monitor that. But the speed of the uptrend is now not as fast anymore, and I think we're gonna see lower prices in the days and weeks ahead, and hopefully that will give us new buying opportunities in the long-term trend that is still very much intact. I'm going to wrap up Sector Spotlight for this week. Thank you very much for watching. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. The handles are on the screen. If you've got anything to share, any questions to ask, please don't hesitate. If you're watching on YouTube, don't forget to give us a thumbs up.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.